Alright guys, welcome back to the channel. Today I thought it'd be interesting to have a look at one particular signal that triggers the parabolic bull market pump. Of course, Bitcoin's been underneath the old all-time high for coming up to 6 months now. This was one of the signals that we put out on the channel back in March when everyone was extremely excited about Bitcoin possibly going to 200 grand. Now we've also seen this signal on the S&P 500, which has led to a decline and basically more time underneath the old all-time high. I'll get into this in a little more detail. More importantly, the parabolic signal, as I've covered the 3-day down rule many times on the channel. But if you've missed out on that, of course, you know what to do. Hit the like button and subscribe to the channel if you're new here. Heaps of new subscribers in the last few days, which is quite interesting as the emotions have gone absolutely wild over a few percent drop on Bitcoin, and many pointing to the problems with altcoins dropping. Now, if you find yourself in that situation, I've got more on that later in this video, particularly using Solana as an example. If you're finding yourself freaking out about a few percent drop on some of the, well, on Bitcoin in particular, but maybe your altcoin portfolio is down, I'll go through that in this video. Some amazing comments over the last couple of videos, and I'll just point out, if you want to see more of this content in your email inbox, check out the free crypto and economic report. There's a link to this in the top of the video description. So I've got a couple of quotes to start with, but also some great comments from you guys, especially at this time in the market where we're seeing a dip to 56K. It's still macro bullish. That was what we looked at the last video. Before this month ends, Bitcoin, I would say, might revisit these lows, especially if the support levels don't hold up. That's pretty straightforward, I would think. Now, over to the quotes themselves. If we looked at some of the comments there, in bear markets, of course, it depends on the time frame that we're looking at. Stocks return to their rightful owners. This is from JP Morgan himself, or at least that's what I found on the internet. I reference this to BTC in particular. Not altcoins. Altcoins are really there just for big moves up and down. Try not to get into a diamond hand situation where you hold these things forever. Most of them are just not going to work out. But essentially in these downtrends, the stocks or Bitcoin, as I'm looking at here, return to their rightful owner. And I think this is one of those periods where weaker hands, if you want to call it that, or basically just the sellers that don't think this market has any further to go, are getting out of their position, selling off their BTC, and this is going back to their rightful owners. Of course, we can all be completely wrong. Maybe the rightful owner is the fool and the price just goes down until it hits 16 or 20K. I don't think that's the case, and I've got more data to have a look at in this video itself. Now, I also love this quote here from Peter Lynch, because often we think we need to be 100% right. There's no chance of being 100% right. Probably not even 90% right, as much as some crazy traders out there on YouTube think they're getting 90% hit rates. Again, it all depends on your targets as well. That might be for another video, just looking at risk management and where to set your stops. But as Peter Lynch points out, obviously a legendary hedge fund trader in the 80s, doing roughly 20+% per annum for many years straight in this business, which is trading and investing. If you're good, you're right 6 times out of 10. You're never going to be right 9 times out of 10. And some would even argue that you can be extremely good if you get 3 or 4 out of 10. But remember, you've got to get bigger X's to the upside. You can be 8 or 9 out of 10 if you're just taking really small swings, just getting in and out of positions. But if you are taking major swings, you might be wrong 6 or 7 times trying to get into that position. And then when you are right, those 3 times out of 10, you're right in a very big way, which is what I look to do. I want to get those bigger moves to the upside. And when you hang on to those, you get huge multiple returns to the upside. And that's why I'm still bullish on the markets overall, because I still see this as the macro bull market. Just how bullish, might you ask? Well, we're in the winner's curse phase, so I'm very bullish. Many of you have seen this before. This is our 18-year cycle. It's been playing out for over 200 years. I got no reason to doubt it at this stage. And basically, after this final peak, which is the area that I think we are in, then comes a pretty significant decline, pretty significant collapse. So while we're still in this stage here, there's no reason, in my opinion, to doubt that we're going to see any sort of major collapses in asset prices. I'm not concerned with the talks of recessions or the small stuff, the interest rate cuts here and there or interest rate rises. We're in this phase of the market. The data for this goes back over 200 years. It's beyond the scope of this video, but for now, this is basically what I've been basing my thesis off for many years now, as you've been following here on the channel, as I can see from many of your comments as well. Fantastic one here. Exactly what we've been looking at when it comes to the 3 days down. Likely, I said 4 to 6 months of correction. And so far, so good. That's basically what's been playing out. So that's our winner's curse phase. I still think there's further upside. Let's have a look at some of the other data here. Looking at election years and what happens with September through to the end of the year. Here are all our election years. These are the big recessions, and essentially the red markers here show the S&P 500 return from 5th of September, which is essentially now, through to the year end in election years that ended in a recession. So how bad were they if they ended in a recession? Negative 7%. You had, well, that was not in a recession, but negative 3%. That was a recession. It was positive 2%. And then these two are the big ones that skew the data, as it says over here. And I might add to this, you got 2008 and then 1932. In the winner's curse phase, 2008 was the end of the cycle. So it's a time you do not want to be in the market. And that's why it skews the data, because it's the end of the cycle and you're going to see bigger collapses at the end. And so far, I could see that coming after 2025. I'm not sure the exact time frame yet. We're going to find out as the markets continue on. Maybe it's in 2026, maybe it's 2027. We'll wait and see. But for now, the markets still look like they want to go up after this particular pause. And if we look at the timeframes here, or the percentage gains from September 5th through to the year end in election years, which is this year, of course, that did not end in a recession, and maybe we don't end in a recession. I would just remind you that we have not seen a recession in the US since the COVID crash. That was a very fast recession, probably like I think it was 1 quarter or 2 months. And so for 2024, if this doesn't end in a recession, I know many people talk about that we're maybe in a recession, whatever. We're looking at the data itself, okay? And it's not a recession. No recession has been called. If that's the case, well, then you can look at a positive 4.3% on average from this period in time. So stock market's going to go up. Now, that's important to note for this parabolic move that I'm looking at, or this parabolic signal, and then, of course, a parabolic move for Bitcoin that we see on the S&P 500. This was the call for the 3 days down. So I'm just going to get to the S&P 500, the update there, and then look at this signal. Essentially, putting this out in March, there is the peak. We see these often. For me, I'm just going to use this as a reminder, and hopefully it reminds you if you want to put it into your trading toolkit. It's a very, very strong signal that pushes markets down for considerable amounts of time, like it did back in April of 2021, and it didn't reach a new all-time high until October. So that was 6 months. The signal came up in April, right at the peak when everyone thought it was going to $80,000. It didn't. Market collapses 50-something%, and then it takes its time to get all the way back to that all-time high from the previous cycle. Again, we're seeing this, and then of course the data's ended up like that, dragging the price down over these last 6 or so months. And we've seen it again for the S&P 500. But I've got one more here to have a look at for the S&P 500. A reminder, the summertime trading lull, July, August, September, October. So basically just looking at the volume for this period, it seems like the volume will eventually come back. But in terms of September, I think we'll have to wait until the end of the month, just according to the volume seasonal pattern here for the NASDAQ and for the S&P 500. Where does it currently sit? Well, it looks like it's on a pullback. It's had a very strong move out of the Japanese yen fear of that low back in early August, 50% levels at 5,400 points. And in terms of the macro breakdown, macro invalidation, the level still sits roughly around 46 to 4,800 points. The S&P 500 would need to break down and close under these levels to invalidate the current bull market structure. It doesn't seem like it's going to happen. Of course, no one knows the future. I just go back to Peter Lynch's quote, in this business, you're good if you're right 6 times out of 10. And so far, things have been looking pretty good. We talked many times about the lows coming in 2022. I talked a lot on the channel about the breakout. I didn't catch the exact low here, but that's life. I don't get everything 100%. But that breakout was pretty imminent when you can see all these higher lows forming and all of the fear on each of these low points, especially the banking crisis and the US debt ceiling crisis, and then the breakout through the end of 2023 and the breakout at the all-time high. So when the market's in a new all-time high, I don't bet against it until there is a clear signal to bet against it. You just have to keep going up until those signals come out. Just like I talk about here, you don't want to bet against the market breaking out to new all-time highs until there is a signal. That is a very, very strong signal, 3 days down at the peaks, that is. So with the S&P 500, we could be in for something like this, which is similar timeframes to what we're currently in now. So seasonality, you've got August, September, October. Market likes to bottom. There's October, there's September, there's June and July, August. So you still got more down periods there in 2022, 2023. We can see 2021 and 2020. See it break to a new all-time high, pulls back into September, move up into October, higher lows form. So in these cases, they went lower. You can see here, in this case here, it went slightly higher, and then the market started to move up after that into new fresh highs. So all the data we've just looked at is essentially setting the stage for this next move. This, what I think is a parabolic run to the upside, some pretty big breakouts. Of course, there's always invalidation levels. I don't know 100%. No one knows 100%. Peter Lynch doesn't know 100% what's going to happen next. Warren Buffett doesn't know 100% what's going to happen next. I'm still on the side of a macro bull market with this longer consolidation because we've seen it with the signals. And I posted about it publicly online, which is extremely difficult to do, especially when you got all of the backlash from people telling you otherwise, especially at lows or at tops, at very emotional levels. At tops, they do not want to hear it, just like we saw with BTC. The point I'm trying to make here is we probably still have a bit of time to go here until we see these significant breakouts. And for the S&P 500, it has been one of those leading indicators. You start to see these big moves to the upside, breaking out pretty strong trends, which then Bitcoin comes back into the picture and pushes to fresh high prices as well. So as I said, setting the stage, we're in this final leg here for the 18-year cycle. And our current cycle that we're in started around 2010 to 2012 when the housing prices and the economy bottomed, not the stock market. So yeah, we're just looking at that low, and this is going on sort of that 14 years up from about that 2011-ish, 2012 period, due to end roughly around 25, 26. So back to this particular parabolic move here, you can see with the swings for BTC, which is the orange line in the background, and the bar chart here is the S&P 500. Now I've broken it into what I'm calling accumulation, and then the bull market, which essentially you could call it the parabolic part of the bull market. To me, the bull markets always start from the lows and end at the tops, just so you got a reference point to use for your analysis. I'm still calling this the accumulation because we're going through multiple accumulations. Again, I could be wrong. It could break down. But anyway, just looking at this accumulation phases, as you can see for Bitcoin, you had 7 months back last year, and we're currently into our 6th month now. If we take a look at each of these breakout periods, just looking at the trend and the movement of the market, like the pace of the price action for BTC, not the old, oh, if it breaks into a new all-time high, then this shifts everything. That stuff I think is outdated. This old 4-year cycle, Bitcoin remains underneath the old all-time high until you get into that parabolic stage. I think that's outdated. The same thing with the halving cycle. I don't use that for my main signals. I'm looking at how markets behave, looking at the price action, time analysis, patterns, volatility, that sort of thing. Okay, so here you've got the price action for BTC. It is climbing and breaking to new fresh highs. The S&P 500 in the background is also breaking to fresh highs. It has a correction, pushes higher, a correction, it's in a new all-time high, and then it starts to go on its strong trend from there. You can see the angle of ascension for the price action here for the S&P 500 really pushing pretty hard. And now Bitcoin has done the same thing. It started from the base here at $500 or $600, and then started to get faster and faster throughout 2017. But nonetheless, it pretty much began somewhere at the end of 2016, around that election period, and then you started to see the angle move faster. So basically more people jumping in even quicker, which is pushing the price up even faster. And of course, you take this one off log, well, then you can see just how quick that actually moved. March 2017, pretty much vertical from there. And then roughly from about October, November, that was the first breakout. And you had those few months up, correction, and then you had to just hang on for the ride at that point. And so it shows up a lot easier in a linear scale, which is where the orange line is in the background. If I turn it on log, you can see a little more data here. But nonetheless, let's do it again. Here is 2020, and the S&P 500 has broken to a new high in late 2019, early 2020. COVID tries again to push. It needs some time to consolidate, and in that period, Bitcoin is getting ready for the breakout. So somewhere around that same period, you're sort of August, September, October, big pump out, correction into that final peak, and then the rest is history. We know that a bear market occurred in 2022, mostly 2022, starting from November 2021. So there it is again, the second time there where you get this nice clear trend for the S&P 500. Are we at that stage now? Some might argue that it is a clear trend. I definitely think it's got some very clear signs that we're in a macro bull market, but it still is within a lot of these pullbacks at the moment. These other trends didn't really have any pullbacks. You had red months, but you didn't have any swing pullbacks here. Look at that, just straight up on the swing chart. One pullback here, and then basically a couple as you get into the peak, which is typical. You're starting to see a rollover, changing of the trend towards that peak, and eventually you are wrong in your position if you're still trading with the trend at those peaks. And that's what tells you maybe the market's getting ready to change direction. Same thing happens at the lows, right? So if I change it over to a logarithmic scale, not as strong as some of the other moves in the past, but still you could argue that it is a pretty strong move. But we are going through a correction while the S&P 500 has gone through multiple corrections now on a monthly chart. So some significant moves here for April and for August. So with all that said, and looking at some of these signals on the breakouts here, I think the next time Bitcoin will likely show some pretty strong moves are coming up. So possibly October, which is essentially, let's call it Q4, and then the S&P 500 would probably, no guarantees, but probably also see the start of that next strong move to the upside, which basically calls everything in. Risk assets are on. It's time to start throwing a whole lot of money into the markets, because this is what I'm thinking with the market psychology, that is. I'm not telling people to go and do that, but the market psychology at some of these pullbacks are, we've been able to get through all of these fearful points, these news headlines that will pop up on our wall of worry, and it still hasn't killed the market. So you start to see the ascension, basically the speed of the market, go up even faster, which leads into this final peak, this winner's curse phase, and then the markets roll over. I know I've seen some argue that, people are losing money in crypto. It's like, forget that. No one outside of probably us watching here gives a shit about crypto. They don't care about altcoins. It's absolute just gambling garbage on the side for the majority of people, right? It's rat poison, if you want to use Warren Buffett's saying, or was it Charlie Munger? Either way, the point here is it doesn't matter about your altcoins that are dumping 60, 70, 90%, because the majority of the money in the world is in real estate and the stock markets. And we know from the facts that real estate is going up. New fresh highs for the US markets. They were hitting new fresh highs recently. I've posted about that on the channel and my X. And also Australia, 19 months in a row. So you're seeing this around the globe, and you're also seeing it with the UK pushing to fresh highs again. Higher lows forming here and coming up. And these are the largest economies in the world, okay, that trade with each other. So on the back of that, I think we've still got a little bit of uncertainty to go through until we get to this breakout point, which starts this big, significant parabolic move to the upside. I did say I would talk about altcoins in this video as well, especially if you found yourself holding and you're down so much on that portfolio. I think it's really important to understand where to sell out of if you're finding yourself in a sticky situation and you feel like you've just been holding a bag of crap the whole way down. Now you're down 80%. Try not to let that happen next time round. I think some people are going to get out of this and be quite lucky to get out of this situation. Let's have a look at Bitcoin and then I'll have a look at these altcoins as well. Basically just updating the fear and greed index, which is another sign or another area that you see these parabolic moves start from. Some pretty big advances to the upside. We've seen extreme fear today, actually at 22. Days before, fear, fear, fear. Here is the graph itself, basically trading around these lows. And we go to the entire pieces of data here. You got all the lows at the bottom here, more lows here, more lows here. Wipe out anything to do with 2022 because that was the bear market. You've also got these ones through here. Sorry, that's the bear market. Each of these times, you see these pretty significant pumps to the upside. And if we add the price chart into the equation, you can see a lot of these extreme fear moves with the start of those parabolic moves. COVID bottom, big advance, parabolic move to the upside. I'm not talking about little daily moves here or even several weeks. These things have lasted months on end. And that's a sort of movement that I'm looking for in my portfolio. I want to see those longer trends because I find them much easier to identify and then hang on for the ride. And it's hard to hang on for the ride, especially if the emotions are catching you off guard and you're getting fearful of a lot of these moves up and down that happen on the daily basis. And that's especially the case in cryptocurrencies. A lot of big moves to the upside, huge moves to the downside. Looking at BTC right now, sitting at 56K. The support level's 53. I dare say if this starts to break down at 53, you're probably going to see some retest of the lower 50s, which of course is very close to the current low in August at $49,000. But remember from the previous video I had up here, flash crash, worst price to remain macro bullish. We're looking at multiple levels here, but I'll just make mention again, the bull market support level, 44,600, basically slicing 50% straight through the middle of this entire bull market thus far. So onto the daily, basically sitting at 56 as I record this, same deals, 53 there, 49 is the low, bull market support at the bottom. The big one that I can see from my own analysis is Bitcoin needs to get back above $61,500. That's going to be a major key level. If Bitcoin does happen to find a low here, anywhere from the low to mid 50s to where it currently is, it's putting in a higher low on extreme fear, which is also another good sign. We talked about that in March of 2023, the banking crisis. It was a very extreme fear time for the stock markets, and that was a higher low, March 2023. If I have to show it again, it's right there. The market took off from that point, but everyone thought that it was going to be a major recession because of some tech banks in California going under. It didn't happen, and the market friggin' skyrocketed from that point on the extreme fear. So I'm not too concerned with the day-to-day action here. I do want to see some of these signals come in, basically the volatility, then a push back above and some strong closes starting at 56, and then of course the 50% level at 61,500. Time frames using the total cryptocurrency market cap, 22 months is where we are at from the low. We're into the 22nd month now. Last cycle, the 22nd month was just starting the breakout. So somewhere around this period, as I've been looking at for some time now, maybe into Q4, I suspect we might see the early signs here of some strength closing above the 50% levels, potentially getting closer to those tops there at $2.5 to $2.7 trillion. Sometime in Q4, just looking at the timeframes here, I think this has the possibility of happening, again, based on the data we're looking at here, winner's curse, prices going up, and then, of course, the stock market also finding its ground over the last quarter of the year. So that's the timeframes here. It looks like it'll be the worst possible place to start puking your Bitcoin positions especially with the time frames beginning to run out here. As for the altcoins, if you find yourself in a sticky situation, you got no idea when you should be selling out of these things because you just keep holding on, let me remind you about the Gann swing indicator. A link for this is in the top of the video description. You got a 7-day free trial to test it out, see if it works for you on your TradingView. Maybe you got a free TradingView account. It still works on that. If you're going to layer this on top, maybe use the weekly chart, put some 50% levels on there if you know how to use them. And if you see the price chart breaking down, maybe you're using your Bitcoin chart as well. You see this starting to break down from swing lows, sell some so that you start to lighten your position. Now, of course, you could sell some like right here and watch the market rally against you. But if you've got the patience and you understand how the tools work and how your trading plan works, well, then you can just hang in there because eventually you typically see it come right back down. It's not a 100% guarantee. There are no 100% guarantees in the market, but at least it gives you some confidence and a written plan that you can work with to lighten the load and not be stuck in positions wondering when should I be selling out. You've got some objective data here that helps you exit positions and helps you also get back into positions. If you start to see the swing chart break up, you can enter on the breakout of the swing. Huge gains to the upside. Pullbacks, entering on the breakout to the upside. So you're trading with the trend and eventually there'll be an area to exit. So you're taking profits from the breakout to the breakdown of the swing. There is your profits right through the middle there. You're not trying to catch the tops. You're not trying to catch the exact lows. You want to take a chunk of profits out of the middle. This tool is very, very helpful, especially in runaway bull markets, parabolic markets, which I think is part of which is what I think we're going to see in late 24 or 2025. Of course, we need to see some of the breakouts first, but at least you've got areas and rules that you can set in place to get on board in case you miss any of those lower prices that you're looking for, some of those lower swings that might occur. So you can sell a little bit here, or you can sell all of it. Completely up to you. You just need to know your time frames. Sell a little bit more here, like that. Sell a little bit more at the next swing lows, probably the major ones here with the 50% levels. And so if you are finding yourself stuck in these situations, this I think is a fantastic tool to help you get out of those situations. For most people, it pays for itself like that. You're going to find yourself not be screwed holding dead positions that just keep falling and falling and falling. Imagine if those XRP holders knew about the swing indicator. They could be selling out here and here and here on the way down and then getting back into it if the market turns back up in a major way. You can apply this to any other cryptocurrency. So check it out now. Use the link in the video description, 7-day free trial. Apply it to your asset that you're looking at and try some of the longer term charts as well so that you can take out the noise in the market and not be worried about the day-to-day stuff that goes on here with the extreme fear one day and then the greed the next day and all that sort of noise and nonsense that occurs in the markets. Make life easier for yourself and hopefully you're going to be making more profits in the future. Thanks again. Hit that like button if you found some value. Subscribe to the channel if you're new and you've made it this far in the video. Thanks again, and I'll see you guys at the next video. Take care and peace out.